Boy, oh boy, that weekend just flies right by, doesn't it? Absolutely does. But it's great to be back here with you all, though. It's about that time of day again, isn't it? It's Monday evening. It's June the 10th, 2019. My name is Joseph, by the way. And as always, this is your nightly newsletter. Now, in case you forgot from last week, right, I help traders find predictable, dependable, reliable, high-quality trade setups using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little bit different. My job tonight is to identify the best levels, the best setups, the best opportunities we see setting up for tomorrow. That's Tuesday's trading session. And tonight we're going to cover a lot here tonight. We'll talk about the calendar for tomorrow. We'll grab oil, S&P, Nasdaq, gold, and euro in the video tonight. Got a lot to cover here in this nightly newsletter. I'm going to jump into that oil market first, though, tonight, because we just saw a beautiful 1, 2, 3 reversal, and now those bears are looking for prime levels to be selling in tomorrow morning's trading session. Let's grab that oil market first. Let's get this party rolling here. Always great to be here with you guys and gals here this evening. That weekend just flies right by, doesn't it? Starting off with oil, though, here. Boy, oil spent a lot of time today, right, inside that trading range, right, when going sideways for most of the time today. But as you can see, though, a nice 1, 2, 3 breakout. And, of course, anytime I see a strong move in one direction, we're probably going to get a second leg. At the same time, anytime I see a 1, 2, 3 breakout like that, I'm always now looking at some key levels of resistance here overhead. I've got 3 levels of resistance, 4 levels, when you look at it this way, 4 levels of resistance here overhead. And ultimately, I've got 3 different patterns I'm watching for as we get that pullback. So we know we're bearish. I'm looking for a sell here right now. I've got some levels of resistance. I've got 3 different sell setups we'll talk about tonight on this video to keep selling it short. And obviously I'll also talk about, right, what if the market runs higher? What are some different scenarios? First of all, how do you know when it's time to be a buyer, right? And then how do we know how to get in on that so we're not buying right into the top of that range? Because you don't want to get caught chasing that thing higher here, because you see how it's pulling back here right now. We're going to dig into this a lot more detail here tonight on the oil. Over on the E-minis right now, beautiful example here of a reversal on the E-minis as well. Start off with that big gap over the weekend. They climb, but obviously buyers were not too thrilled at buying this high. We see a strong 1, 2, 3 reversal off of that high. You can see those sellers, right? They already came in and grabbed their short right off that hidden channel, which we talk about quite a bit on this newsletter. So that was a nice little perk earlier on this afternoon. Beautiful example there of a 1, 2, 3 reversal. If you watch this newsletter every evening, you know exactly what I'm talking about there. But now we get a problem. Now we get some double bottoms on this. We know we're bearish because, of course, the momentum going lower here right now. Bearish, of course, in the short term. But now we've got this trading range. And, of course, this range-bound market tells me I want to be a seller up above the high of that range. Now, this is going to be interesting, especially for the Nasdaq here tonight as well. On the S&P and the Nasdaq, I'm looking for one very specific scenario here to sell off the top inside that battle zone. But at the same time, though, I'm also looking for another specific scenario to flip this thing around, right? Because come on, let's not kid ourselves here, right? The last few days have been razor sharp bullish, so there's a good chance we may flip-flop this and run right back up to retest these highs. Right now we're bearish, and I've got to respect the bears here. I'm looking for a sell off these highs, but I definitely will be looking for signs, and we'll talk about that tonight on how you can really dig your heels in there and be a buyer on this as well. Over on the Nasdaq is very similar to the S&P right now. Had that big gap up, of course, over the weekend. There was a little bit more aggressive price action, as you probably noticed on the Nasdaq here this morning. But sure enough, right, they get the 1, 2, 3 reversal. And as I mentioned earlier, right, they already got their sell off of that hidden channel earlier. So if you were watching for that sell, you're already in this thing right now, holding your runner. But at the same time, though, same thing as the S&P, right? You can see it kind of flattening out here as we go. Now, Again, anytime I see this much momentum in one direction, I always expect to see a second leg. So I'm definitely looking for a selling opportunity up above, inside that channel high, up around that grind break area, which reminds me, that grind break, we'll talk about this tonight, that grind break is a huge clue. There's a couple of them on the charts here tonight. I'm going to talk more about that grind break means for us. But at the same time, though, I'm looking to sell off these highs. And again, there's one very specific thing I'm looking for to know when the market turns bullish, because I don't want to chase after it, right? I don't want to chase after it as it goes higher. So to buy it, to sell it, I've got a great plan here for you guys tonight on this video, especially for the E-minis here this evening. And then over on the gold, hey, look, there's one of those grind breaks again. Another one of those grinders again. We're going to go into a lot more detail on that. Gold's pretty easy, right? Big gap down, right? Big gap down here over the weekend. We come out, we roll lower, and yeah, we're back in. Do you believe it? We're back inside that range from last week, and of course, we're now kind of a range inside of a range. This is a bear market into a range-bound situation. We're balanced. That tells me now I've really got 3 different patterns to look for to sell up above the high of that range. I'll even talk about one very specific pattern I'm looking for to buy off of the low. I do think the gold's going to give us some great opportunities to fade some breakouts. And obviously, right, there's potential to go up and fill that gap. This gap is at 44.9. How can I buy this? When is it safe to be a buyer? We'll talk about how you can buy this market, because it definitely ain't right now. I'll tell you that much. You definitely don't want to be buying this market just yet. Way too bearish. But we will talk about how to buy this yellow metal right later on tonight on the video. And of course, we can't forget about that mighty euro. Boy, lot going on right now on this euro. I think the most important thing though right now is overall we are bullish. We haven't reached the measured move yet, so we have a good idea where they're trying to go. But then we see this shock, right? This strong move down. And remember, anytime we see a strong move in one direction, we're going to probably see a second attempt, right? Another leg. And of course, speaking of second attempts, right, I've got the 2-try rule in play right now to help me get my grip here right now to buy this euro. So we're really looking good here for a buy. I've got a couple key levels of support. I don't want to buy right now, though, because I have to respect those bears, but I am going to talk about how to buy the dip. And what if the market goes lower here? It's going to be really difficult to sell this market right now for a lot of different reasons. If you look left here, you can probably see why. So I'm going to talk about some different buy setups I'm watching for right now on that euro, and we're going to cover a lot of stuff. A lot of great content here tonight on this newsletter. Euro, gold, Nasdaq, S&P, crude oil. We're going to break all this down here for you guys in just a few moments. Before I jump into the charts, though, and put the plan together for Tuesday, I want to remind you, just before I publish this video every evening, I send an email out to everybody on our email list, and I want to make sure that you get that email so you know right when this nightly newsletter goes live every evening. And to do that, just head over here to the blog at Sideways Markets. There's also a form on our homepage at schooloftrade.com. All I need is your name, your email address, and then hit that subscribe now button. And don't forget, when you subscribe to that list, make sure you check your email, because I'm going to send you a welcome email with a bunch of goodies in there, and you need to verify that you get that email. And also, don't forget, sometimes those emails end up in your spam folder, in your junk folder, in your promotions folder if you're in Gmail. So if you don't see my email to you right when you join, make sure you find it, whitelist those emails here from School of Trade, and that way you'll get that email from me every evening when this newsletter video goes live. And then, one more thing real quick. I need your help. I need your feedback. Right? How could I make this a better video for you guys every evening? What are your favorite markets? What are your favorite trading time frames? How do you want to use this? Do you want this done, right? Do you want this in a long form format, in a shorter format? Do you watch the video every evening? right? Or do you watch it the following morning before you trade with it, right? How do you use this video? I would love to know what you love, what you hate, your favorite markets, which markets do you wish I would skip, right? What do you love, what do you hate? Drop me some feedback in the comment section below. I am always listening, and I love to hear, right, how you're using it or how you would change things around here if you had control over how we do this nightly newsletter. So do me a favor, drop me a comment in the comment section below. And while you're down there, by the way, it would mean the world to me if you gave me a thumbs up on this video tonight. I work very hard to put this content together every evening so you guys are ready for the following day, so I'm ready for the following day with you guys. If you love the video every evening, if you tune in every evening, give me a thumbs up if you would, because that goes so far at helping to expose this YouTube channel to other traders right here on YouTube. So thank you so much. And while you're hitting that thumbs up button, hit that subscribe now button, hit that bell icon so you always get notified when I publish something new. And don't forget, I'm always here to help. Please don't be a stranger. You know, I realize, you know, a lot of websites these days, there's no one to talk to. It's all automated robots. I'm old school, I guess. So I am old school. I've been doing this almost 15 years here online, teaching and trading with you guys. And so when you call that phone number, I'm going to pick up the phone, answer your call, answer all your questions. So if you have any questions about becoming a client, joining our trade room on a free pass, getting access to our free training classes, right? Or maybe you have a question about charts, data, brokers, favorite markets, whatever those questions might be. Don't be afraid to pick up the phone and call me up there in the upper right-hand corner. I've also got that great live support tool there in case you don't want to use the telephone. So keep in touch, right? Use that toll-free phone number and keep in touch in the comments section below. But for now, we got some work to do here tonight. It feels great to be here with you all. Hope you guys had a great weekend. Boy, there are some great sports on television this time of the year, aren't they? Got the hockey playoffs, got the NBA Finals, Game 7 NHL on Wednesday. Oh my goodness. But that's on the topic of tonight's video, though. We're talking about the financial markets, right? So we can make some money tomorrow. Speaking of tomorrow's Tuesday. It's June the 11th. What do we have here? Well, first of all, let's think about this for a second. This is the second week of the month, right? First week, second week, third week, fourth week. Okay, let's kind of get an idea of what's going on here right now, right? The first and the last weeks are always usually going to be, you know, relatively volatile, right? The beginning of the month, the end of the month, there's that sense of urgency. Now, next week, you're going to probably start to see some rollover stuff next week, right? So Eminis, currency futures, oil will probably be next week as well. So this week, maybe not towards the end of this week, but definitely early next week, we're going to start seeing rollover, right, on some of these markets next week. So we'll be talking more about that as we go later in the week here this week. And then you got the lonely old second week of the month. Nothing really amazing is scheduled for the second week of the month. In fact, a lot of times, not this week, but a lot of times the second week of the month is kind of a wide open week and the markets kind of flounder a little bit. Again, not necessarily this week, but a lot of times, you know, again, this kind of like this vacuum effect on that second week. And I'll tell you, because we had such big moves at the end of last week, I wouldn't be surprised this week if we start seeing these markets start to sideways out, right, and kind of wait for more information about the U.S.-China trade talks, the U.S.-Mexico, the so-called immigration deal going on. There's a lot of stuff out there happening right now, obviously, that still hasn't quite been nailed down yet. We heard rumors this weekend about a U.S.-Mexico trade/immigration deal, but the Mexican authorities were very quick to kind of throw cold water on the immigration side of it. So we're going to kind of hear more about it this week, and we're kind of waiting to hear how that's going to go. We also saw a lot of gaps over the weekend, and usually gaps require the market to balance out a little bit. So as of right now, obviously, I got a great plan for you guys for tomorrow, but just be aware of that. As we start to get to the last few days of the contract month before rollover next week, we may see a bit of floundering style market this week, which means range range bound, which means fading breakouts. We're not quite there yet on most of these markets. We're getting there. So just keep it in mind, right, as we go. So now that you kind of know the layout, right, of the month or of the week we're dealing with right now, you'll notice it's pretty much all about the indexes, right? The producer prices, the consumer prices, and later on in the week, of course, jobless claims and retail sales. The big news of the week, tomorrow, 8:30 CPI, Wednesday, PPI tomorrow, CPI on Wednesday. Probably not the big deal on Thursday. And then, of course, huge retail sales number, right, on Friday, the 14th. So just be aware of that, right? Be aware of that. We do have, right, some major news coming up this week. Typically, though, second week of the month isn't going to have this much major news. So we definitely have, right, some good stuff ahead of us. Tomorrow, as you can see, it's all about that PPI number at 8:30. I would assume tomorrow that PPI number will set the table for a 9 o'clock to 10:30 move. Okay, that's what I would assume tomorrow, right? The PPI number, I'm not a big fan of trading the news. I'll wait for the news to come out. And as I always kind of say, right, the news will set the table for the setup that we'll eventually use, right, to make the profit tomorrow. So 8:30 Eastern time is the news. You're going to want to give it a few minutes after that news comes out. And I'm thinking 9 o'clock, 9:15, 9:30. Between 9 and 10:30 tomorrow is when I would expect to get your best setups in the U.S. morning session. Now, obviously, right, we open up our trade room every morning, and we trade together every morning, 8 a.m. to about 11:30 Eastern time, Monday through Friday, right? So tomorrow morning, come join me as a client in the trade room. I've got a great free trial right on the homepage of our website. We'll talk more about that as we get later in this video because I got some more to talk about here tonight on these charts. So news tomorrow, 8:30 Eastern time. And again, let that news kind of set the table for us, right, as far as where our setups will be after that news comes out. All right, let's jump into some charts here right now. Now, I went through a brief rundown in the introduction, crude, S&P, Nasdaq, gold, and euro. Let's get our hands dirty on this right now. First of all, what do we know about oil? We know that there's a big old range on here. And we know that ranges do tend to be magnets. So there is a possibility this will end up back inside that range and possibly a pendulum swing if things really get crazy, right? The amount of the move below the range and the amount of the move above the range. There's definitely possibility of that. OPEC is always trying to keep us on our feet or on our toes around here. There definitely is a possibility of that, but we're definitely not there right now because what else do we know? We also know that we saw a one strong move down, a pullback at least of the moving average, and three, a strong move through. This is called what? It's called a 1, 2, 3 breakout in this case, right? Because it was breaking out of a range. It's the same basic pattern if it was a reversal, which we'll talk about on the E-minis here as well. Now, what does a 1, 2, 3 pattern tell me to do? A 1, 2, 3 tells me to go out now. It tells me we are bearish. It tells me to go find levels of resistance. So what I'm going to do is I'm going to mark up those lows and I'm going to start drawing trend lines, right? Off of that low up to that high, right? That becomes a level of resistance. I'm going to draw a trend line off of that low up to that high. That becomes a level of resistance, right? So I'm now in that. Once I see that 1, 2, 3 breakdown, I now know we're bearish. We're not range bound any longer. There is a range on there, which is still going to be in play tomorrow if these bears fail. But for right now, the bears have control. What else do we know right now? We also know, if you look left on this, we also know that we are right back in that same range, right? That kind of 53 mess that we saw, I know, right? Not last week, but just before last week, right? Then we had that big drop down, then right back up, and now we're back into that range again. The moral of the story is this could end up like gold, right? If you talk, we'll talk more about gold here in a moment, but we may end up going lower and kind of settling in down here, right, into that trading range here. So we may end up like gold. We're back inside that range, right, from last week as well. So here's what we know. We know we're bearish. We know we have that new hidden channel, right? I've drawn off these lows up to that high. I've drawn off these lows, right, up to that high. I'm marking up these prior lows. This is my sweet spot up here, and I want to be a seller, right? I want to be a seller as we go. Let's talk about what type of sell setups that I could use if we pull back. And again, at the same time, because this is a range up here, right, because we spent a lot of time inside that range today, I mean, let's be honest, this could go right back up into that range, and I want to be ready for how that's going to work. And you can apply the same tricks we'll talk about tonight over on the Emini S&P and the Nasdaq as well. So let's talk about sell side first, right? Let's talk about sell side first. The key is I want to sell at a level of resistance, right? This is easier said than done. So I mark up that level, that level, that level. I've got that level right there too. All this area right here is that kind of sell zone, right? Now here's what I'm watching for. I want to see this market get up off of these lows, up into that level of resistance. Now, from there, you're going to have buyers trying to buy pullbacks on this because we're going to go above that moving average. And what will happen is you'll see buyers try to buy the pullback. It'll probably look something like this, right, where it goes above the moving average. The buyers clearly try to buy off that moving average pullback, and they fail, and we get that run back down, right? Sometimes they're not as easy to see in hindsight, right? Like this one, we go up, we pull back. You can see from the wick on that larger time frame candle, the buyers did try to take it up, right? They fail, and the market slides back down again. That's pretty much the same idea I'm looking for over here now, right? I want to see, first of all, those buyers try to take it higher. Right? Get me off of that low. Once I see this market, again, up inside of resistance now, I know momentum is bearish. And so if the buyers try to buy that pullback now I know exactly where their stops are, and I can sell right into those stops. In fact, not only can I sell into those stops, I can also look for the moving average to come over, and I can use that same level as a chance to sell a pullback. Right? I call this a failure pattern, right? A buyer failure pattern into a seller pullback pattern. Now, it's going to be really important on this because this is a range down here that we try our best to stay out of that range, right? So, for example, if the market tanks down like that and then comes over like this, you're not going to want to take that sell right there, right? That's not going to be a very good pullback right there. Does that make sense, right? You're going to want to make sure you stay out of that range and get it from there. That's why I kind of draw it like this. It's a failure. We go up, buyers try, and they fail. And then, of course, it's a pullback. Again, the key here is you're using resistance, and most importantly, you're using it in a way to capitalize on the other side of the market, the buyers in this case, getting caught on the wrong side. Now, how do we turn bullish? What would be the bull play here right now? This is a little bit tricky. Okay, first of all, where would the bulls be trying to go? First stop is they're trying to get back to retest the high of the range. Second stop is going to be back to retest the big high, right? That kind of blow over high that we saw right the beginning of Sunday evening's market. So we know they're trying to go. They're trying to go back up to retest the high of the channel at 36, or the range 36. And then, of course, up at the high of day, up around 84. What else do we know? We also know we have a trend line coming down overhead. That trend line is possibly the biggest clue here. So here's what you want. Remember, you've got to turn it bullish first. So how do we turn bullish? We need a 1, 2, 3 reversal. We got to go up, same setup. Okay, same setup. Nothing is different. But now the buyers, they jump right off that moving average. Okay, makes sense? Now, when they jump off the moving average, okay, there's a big difference here. A failure pattern, the buyers will just limp off the moving average, right? And they'll collapse. Okay, if it's a reversal, the buyers will jump off the moving average. You'll see it, right? You'll see it. There'll be clear excitement coming off that moving average as it runs. But here's the problem. I don't want to buy into that trend line, do I? No. We definitely don't want to buy into that resistance trend line. So I've got two options here right now. One is going to be a trap pattern. The other is going to be a breakout pullback pattern. Now, a trap pattern. Trap patterns are pretty interesting because as we go higher here, I don't want to buy into resistance. My favorite pattern, right, to avoid buying into resistance is always going to be a trap setup. Now, trap patterns are pretty simple here, guys. Traps go below prior swings. So if we see the market jump off the moving average, don't chase it. Wait for a trap low, right? Wait for a trap low. At the same time, if we can't get in on that trap low, again, because it may not give it to us, if we just go straight through it, now, just like before, you've got that range up here. You don't want to trade the range. You want to get outside that range, again, buying below that low. If we're really lucky here, guys, there'll be a hidden channel on here, right? And you'll be able to combine that hidden channel. And again, notice where I'm drawing this. I'm drawing it just below the low of that range, right? I'm drawing it just below the low of that range. That's the key, right? That's the key. The key is to get it before it's into that range, right? So these are two patterns I'm watching for. One is up, a failure off the moving average, and a sell back down. Again, it could be a sell into a pullback sell from there, or it's a 1, 2, 3. If I can get it, it's a trap. If not, it's a breakout pullback, right, up above those highs, right? Again, hold the moving average, right, and you're buying those pullbacks using that resistance level, right, as a support level now. Now, what if we go lower? Right? What's the plan if it just keeps on going lower? If it doesn't pull back for us, if it just keeps rolling over here, watch for a spike in channel now, right? That strong spike down may not give us a deep pullback. If that's the case, mark up the high of the channel, the base of the channel, the first pullback, and that's where you want your sell from there, right? So if we don't get the deep pullback now, we don't want to go chasing after things. We want to make sure we sell high. What's the best pattern up there, by the way? Same basic idea. We go up, let the buyers try to buy the pullback. If they fail, we're selling right into those stop losses, right, as we go. Beautiful opportunity right now to sell high here on crude. Will the buyers take it back? I don't know, right? Your guess is good as mine. At this point, though, the buyers have to prove it to us, right, if we're going to respect this thing going higher here. Let's keep going. Over on the S&P right now. On the S&P has a strong move up. That strong move up turns into a 1, 2, 3 reversal. As I mentioned in the introduction, or as I just mentioned on crude oil here, right, what do? We mark up that low, we mark up that low, we go up to that high, and as you can see, right, those bears already came in and sold off what would typically be, right, really a very reliable entry on a trend reversal. Okay, so that's where we are right now. The bears have it. It's very difficult right now in the short term to call this a bull market. Yes, I do understand the daily chart is bullish. Yes, I do understand the weekly chart is bullish. Yes, I do understand probably the hourly chart is bullish, but I am not a long-term trader. If you are a long-term trader, this video may not be very much of a help to you, right? I'm a day trader. I'm an intraday trader. At the very most, right, intraday trades last a few minutes, maybe a half an hour, right? I'm not a long-term trader. I'm looking for short-term opportunities, which means all I need is right in front of me. And most importantly, I use the moving average to tell me how the market's momentum looks. You know, for example, look at how the buyers are buying every single pullback. The bears never get a chance to get below that moving average. Then look what happens. We jump off the moving average here. That's the same basic idea we just talked about on crude oil. If we jump off that moving average with nice strong momentum, we know this becomes a 1, 2, 3 reversal. So now we know we're bearish. Okay, what else do we know here right now? We also know, which is quite interesting, if you look way, way, way back in time here, right, that prior high, that was back from what? The beginning of May, I think it was. Yeah, halfway through May, right? That high right here, look where we are right now, right? Follow the bouncing ball here, and look where we are. We are right up now, if I can get this thing back in here, right? We are right up. Come on, Joe. We are just now seeing rejection, right, off that area. So it's quite easy to see that that same level, right, just below 2,900, that same level isn't exactly agreeing with, right, these buyers right now. What else do we know? We also know that on Friday, we ended the day on Friday inside of a range, don't we, right? What do ranges tell me? Oftentimes, they act like magnets and price comes back into them. So I have to think that these buyers, unless they can pull out a small miracle here right now, right, I have to think these buyers are probably going to be, right, or should I say sellers are probably looking for, right, a return back into that 28.76 to 28.80 range here. So short-term momentum is bearish. I want to find levels of resistance. I have a good idea of where they're trying to go, right down inside that range. I've got one big leg down. If I can get a pullback, two big legs down, that would give me a symmetry target down inside that measured move. Okay, so now that you kind of know the bearings here, right? Now that you kind of know what's going on, the most important thing right now is I've got that strong bear move down. That strong bear move down. They retest that low, but they're not continuing. What is that? That's a double bottom. Now, anytime I see a double bottom in a bear market, now I want you to put a pin in this for a second because you're going to see an example of something very similar, but not the same on the euro. I want you to remember this scenario right now because towards the end of the video tonight, when I look at the euro, you're going to see a very similar chart. But there's one big difference, and that is the S&P goes 1, 2, 3 off the moving average. That's a reversal. Again, hold that thought for me, right? Put a pin in that thought, as they say, and we're going to come back and talk more about that towards the end of the video because you'll see right away the euro is still bullish while the S&P is bearish, but they look very, very similar, okay? But they're not, and we'll talk more about that here in a second. Bottom line is we're bearish, double bottom. Anytime I see a double bottom in a bear market, I always think range. Now, the wicks on this one gave it away, right? Those two wicks right there give it away where the actual range is. Now, what do ranges tell me? Ranges tell me to buy low, they tell me to sell high, and they tell me to avoid that middle. Okay, what else do I do with ranges? I take that range, and I use that range to create my levels of resistance to sell, and my levels of support to be a buyer. Now, obviously, the market's bearish right now, so I want to be a seller, right? I'm not necessarily too keen on being a buyer right now because I can tell where they're trying to go. They're trying to go back into that range here as we go lower. So what I'd rather do is focus on selling this market. It's bearish with a range. Use the range levels, right, of resistance overhead. Not to mention, we saw that rejection around this 28.94 area. So we know there's a bit of a top here in this market. Now, knowing that, how do I get short, right? How do we sell this market right now? There are two, right? There are two specific types of patterns that I'm looking at to sell the top of this range. And then I'll also talk about what that reversal will look like, right, as well. First of all, we already know when a market's bearish like this, if we can get a run up into that sell zone, get that moving average coming over. We just talked about this on oil, right? We'll look for those buyers now to try to buy that pullback and run it higher. And if they do, it becomes, you guessed it, right, a bull market. At the same time, though, right, if we don't see those buyers fly off the handle, right? If they just kind of slump over like we saw back here, right? We go up. Those buyers did not jump off the moving average there, did they? And that's one of the easy giveaways. This market is certainly bearish right now, right? The bulls tried and then failed right back down in. That's very similar to what we're looking for here now, right, on this S&P to go short. I want to see us go up, get up into that level of resistance. I want to see these buyers come in, try to buy off that pullback. And when they do, now I know where their stops are and we can sell, right? We can sell into those stop losses. Another pattern I'm watching for is if we get a stronger move higher. Now, you'll notice this will have not held the pullback yet to turn a reversal, but if we see a strong move higher, right? Kind of we saw back here, right? We go up, the buyers try once, the buyers try twice, and then it sinks back down. That'll be a similar setup I'm looking for to sell here. Strong move up, buyers try once, buyers try twice, failure back down. What's the difference? The difference is the pullback, right? A shallow pullback, it's a buyer failure pattern, right? A stronger pullback gives the buyers more courage. So make them try once, make them try twice, and then sell back down. But wait a second. Wouldn't that be a bull market? No, a bull market only occurs when they take it back, right? The sellers, they've got control. Think of control, right? This one of the things I learned a long time ago was to think about who had control of the market. You know, there's a lot of different ways to say this, right? I use the term control. It's kind of like American football, right? Where one side has possession of the ball and the other side has to not just get the ball loose, but take possession of the ball. Right? So think about it this way, just like in American football, right? If the market was to jump higher here, the Bears still have control of the ball, if you will. The buyers have to hold the pullback and run it. They have to take possession of the ball, right? So that's the key. Who has control right now? The Bears took control, right, when they ripped the ball out of the hands of the Bulls. Okay, they ripped it out of their hands back there off the moving average, and then because of that, more bears are waiting to sell it. So if we run up here right now, it's not the bulls in control, right? If the buyers try to buy the pullback, they don't have possession, they don't have control, and that pattern is likely to fail. Better to sell into it than to buy the pullback. But if they do hold that pullback and run, now they do have control, right? But now here's the problem. Now we're too high to buy. Right? Yeah, now we're too high to buy up here. The last thing I want to do is chase after it. This is one of those classic examples where you can't trust the pullback because it's not a bull market yet, but then the last thing you want to do is go chasing after it. Right? So here are two scenarios that I'm watching for here right now, right, to buy that pullback. One is going to be if we do get that run higher here. Now remember, mark up that high, mark up that high, down to that low down there, find that low, that's your sweet spot now, and now I'm trying to buy that pullback. That way I'm not buying high, I'm buying low, and in all reality, I have a good risk-reward ratio for the target. We'll just back up to retest the high at 29.05, right, and 3/4. Now, there is one more pattern. The aggressive pattern here would be if we jump. Right? If we jump, you know what I mean, right? If we jump, so we're jumping, right? We're jumping off that move. At some point when a market just cranks higher, we know, okay, it's not a bear market. We may not have got the pattern we're looking for. If the market just jumps on a short covering rally, which it may do, again, these markets, they get a mind of their own right now. Look for that 2-try breakout, right? So it's a 1, it's a 2, and then because we're running out of space, I'm looking for a buy off a trap low here. So again, this is this is the short covering rally, run hard. I don't want to buy high, but at the same time though, with the bears in control, this could come right back down in again. Okay, so what do you look for? You look for a higher high in price up here, bears try once, bears try twice, and you're buying that trap low. That trap low is a really reliable setup. And again, why do you wait for a trap? Because you don't want to buy, right? You don't want to buy into that high. And the best entry pattern that I know of to avoid buying high is that trap pattern. Now, speaking of trap patterns, you know, I have so many great setups that we use in our trade room. And I want to teach you all about them, but I don't have enough time to really dig into them deeper into this video. So here's what I'll do. In the upper right-hand corner, I'm going to put a link up top there. I'll also put a big red button right below the video tonight on our blog here at Sideways Markets, and that'll be a link to join our free trading class. It's a great opportunity if you want to learn all my favorite setups, how I use them, including hundreds of different chart examples, right, of real setups that we see every day in these markets. So if you're serious about your trading career and you want to learn, right, that deeper dive in my favorite patterns, grab that free class. It's linked up in the upper right-hand corner or the big red button right on the home page of the video. Now, don't forget, if we run lower here, right? If this thing continues to run lower here and we keep going lower, just remember, draw that trend line, find that channel, right? And we'll keep on trying to sell with those same failure patterns, right? Those buyer failures, right? Into pullbacks and then down from there. We'll continue here to look for those same setups. If it keeps going lower, just don't chase it as it goes lower. All right? So now you know how to buy it, you know how to sell it, and don't forget, grab that free course, and tomorrow morning, 8 o'clock Eastern time, we'll trade it together. Now, how about some Nasdaq right now? Nasdaq is very similar to the S&P, right? But there's a couple small differences here. First of all, the Nasdaq was a whole hell of a lot more bullish than the S&P was today. You probably noticed that. Right, it took almost all morning for the S&P to retest its high, and I hadn't even finished my first cup of coffee yet this morning, right? And the Nasdaq had retested its high. So big gap up, and you'll notice I'm not spending too much time talking about gaps. Gaps are, well, in my book, a gap is nothing more than a big green candle or a big red candle. So I would encourage you, don't get too wrapped up in, oh my God, it's a gap, it's not filled, we've got to go lower. We don't, right? We do not. There is no rule that says we must close the gap now. There is that statistic out there that, most gaps get filled, right? 80% of gaps get filled. But again, that statistic is misleading because it doesn't tell you when the gap gets filled. Yeah, most gaps do get filled, but I couldn't tell you when. Usually they happen before Thursday morning. I'll give you that. But it's a long time between now and Thursday morning, right? It's usually Monday, Tuesday, or Wednesday you'll see that gap filled. But hey, just right now, there's plenty of gaps that have been filled in the last couple of weeks. So, don't get too wrapped up in these gaps. Gaps are, again, if it's a gap up, it's a big green candle. It's bullish. If it's a gap down, it's a big red candle. Don't get too wrapped up in trying to fade the gaps or get the gaps filled. I realize there's a lot of bad information online about trading gaps. Now, what do we know? Strong move up, right, on the bulls here for the Nasdaq. Then what else? Strong move down, a pullback, and a run off that moving average. Anytime we see a strong move like that off the moving average, we know the bulls now, right? The bulls have lost possession. Now the bears have possession, right? They have control over this market right now. Now, they may not last very long with it, right? They may not keep it forever with that big bull run. Again, this could easily snap back up and retest those highs, but for right now though, what we do know is the bears have momentum. I'm also watching this as a measured move, right? I'm watching for symmetry right now, but in all honesty, I think it's pretty easy to see if these bears can hold this, they're trying to get back down into that range from last Friday, because just like the S&P, the Nasdaq finished on Friday after that monster rally, right? The biggest week we've had in a year so far, right? Back down to retest that range is probably where those bears are going to try to take it. And it will probably happen quickly, right, if we do get it. So that kind of gives you an idea of where we're trying to go, right? The bears want to go back down into that range. I do have a measured move I'm watching for. The bulls want to go back up and retest that high. The bears have the edge right now, and because of that, I want to try to find a way to sell off that level of resistance. Anytime I see a bear market, and again, hold that thought, because you're going to see on the euro a very similar chart to this, but not identical. And it's very important that you see the difference between the euro and the Nasdaq tonight, because that will give you a lot of clarity as far as what's the difference between a pullback and a reversal. what is the difference, right? Is it a pullback? Is it this is a reversal, right? Because it holds that pullback to the moving average, right? Jumps off the moving average. So we know we're bearish. We'll talk more about the euro here in just a moment. What else do we know? Double bottom, right? That double bottom. That double bottom tells me there's probably a range in here somewhere. When it comes to ranges, it's usually the wicks that give it away. Line up that wick along with the body of that candle, and that is likely your range. Now, you might be wondering, why do you care so much about finding the range correctly? Because that range is what gives me the buy zones below and the sell zones above, as you can see. It is important, right? Small details are very, very important when it comes to trading because, I mean, think about it, right? I mean, I'm going for 10 or 15 ticks. 1 or 2 ticks is 10 to 20% of what I'm trying to go for. Right? What if you were running any other business and your accountant said, well, you know, you're only missing 15% of your profit right now. Hello? 15% of my profit, that's a huge chunk of my profit, right? Or a huge chunk of risk. So small details are big, big deals, right, when it comes to day trading because we're looking for small moves, right? So don't be so lazy about it like I was when I was a rookie. When I was a rookie, I couldn't be bothered with paying attention to small details. I didn't think it was necessary. But when you think about it in terms of percentage, in any other business, if you were just to fudge, 10 or 20%, you wouldn't be in business very long. But in day trading, because only a couple ticks, we find that's easier to do. Anyways, off my soapbox. We know we're bearish. We know we're into a range. I want to buy low. Right? I want to sell high. I'm not too keen on being a buyer off this low right now. I'm not going to lie to you. Just because I think if it goes lower, we're going to probably end up seeing it. Again, try to get back into that range or at least fill that gap, right, from the weekend. So I definitely want to be a seller off of this high. I want to see this market go up, get into this sell zone overhead. In all reality, this channel, I've drawn this channel out just as food for thought. It might not be that useful. In fact, in all reality, right, it may end up being something more like that, right, off of these highs of some nature there. Add that midline in. That midline will probably give it away there, right? Add that midline in. That might be kind of the larger channel that's forming right now. The bottom line is the range is most important. Right? I mark up that range. I know where that level of resistance is. I want to see us pop up. Get these buyers to try to buy the pullback. Again, once I see those buyers commit on that pullback, now I know where their stops are, and we can sell right into those stops for what is usually a pretty easy move back down to retest that low. At the same time, right? At the same time here, if they can hold that pullback, right? If they hold that pullback and make a run for it, we don't want to chase after it. What do? We find the channel, mark up that high, mark up that high. Okay, then down to that low, not this one, down to that one, right? Mark off that low. There you go. Now you've got your sweet spot, and we can buy that pullback from there. Where's my target? Up at 78.5. Relatively easy, right, on that move. Or do we see a jump, right? Does it really jump? Again, the same type of panic buy that led to this move higher. Who knows, right? We could see the same thing tomorrow morning. And if we do get that same thing tomorrow morning, if it does run up like this, look for the profit takers first. Look for the sellers second. What you want is a higher high here. That's 1 try for the bears. That's 2 try for the bears. You'll learn all about what I call the 2 try rule in that free course I mentioned earlier. And the key here is because you're running into overhead resistance, you really want to try to get that trap pattern below that prior swing because that trap is going to be important to avoid, right, buying high. Now, what if we go lower here, right? What if we don't? Remember, don't forget, if we go sideways here, stay patient. 1 try, failure, back down, right? If we run lower, right? If we run lower, this could easily be a spike and channel here. Mark up that low, mark up that high, and believe it or not, it's almost the same exact strategy, right? Mark up that level, and that level. Get this thing to come up into one of those levels. Get right? Get that moving average coming over. The buyers will try to buy that pullback. I'll be looking for it as a failure pattern into pullback pattern, right? And we're back down from there. Failure pattern into pullback, and we're back down from there. And again, if they hold that pullback, right? If they hold it and jump, wonderful, good for them, right? There's no wrong answer to this. Mark up that high, right? And now we're buying that pullback back up. There's no wrong answer to this. It's all about who has control, right? And again, what's the difference between a pullback and a reversal? It's how the market responds off that, right? Off that moving average. Now, again, we'll talk more about the differences here on the euro in just a few moments. Before we jump into that euro, though, let's grab the gold, because gold is one of those times where if you didn't get to it early, you didn't really have much at all to work with here until about, what time was that, right? 10:30, 11 o'clock here this morning. Yeah, 11:20, something like that, with a beautiful failure pattern. We saw this thing just roll over, right? I mean, absolutely get clobbered here. They're all the way back into that range, right, from earlier on in the month. Not a huge surprise. Ranges love to act, right, like price magnets. So we're back into a longer term range. At the same time, right, we see that 1, 2, 3. That tells you it is bearish. And then obviously the gap down is a big red candle. Don't get too wrapped up in, oh my God, we got to go up and fill the gap. We do not. We just need to focus on who has control right now. The bears have control. There is a double bottom, right, in a bear market. As I mentioned before, anytime I see a double bottom in a bear market, I expect that to be a range. And what do we do with a range? We look for failures, buyer failures. I mean, there's a great example of exactly what I've been talking about on oil, S&P, and Nasdaq. This is exactly the same scenario. You can actually see what the oil, S&P, and Nasdaq are probably going to give us if we get that pullback, just like we saw there, right, on the gold. What is very interesting, though, about this particular setup is this grind break right here, right? Now, grind breaks. Let's talk about a grind break. Well, first, let's make sure we finish that thought, right? We're bearish into a range. What does that mean? It means I'm going to take that range. This is a relatively narrow range, by the way. When we have narrow ranges, I like to make, and you'll learn more about this in my free trading classes, right? I like to make my buy and sell zones a little bit different multiple. You'll notice I'm actually tripling this range, whereas in the previous charts tonight, I was just doubling the range. And there are some tricks to this, and we'll cover more of that, right, in that free class that I mentioned earlier, right? You'll learn all about ranges in that free class I mentioned earlier. It's also linked up in the description of the video and that big red button below the video right now. So we know we have a range, right? And we ultimately know that I want to be a buyer, right, down below. I want to be a seller, right, up above, and I want to avoid the middle, right? Stay away from that middle. And honestly, guys, because we are inside of this larger range, I feel like the gold has probably reached its objective. Okay, and that's important. That's an important difference because, like the S&P and the Nasdaq, they want to go back to that range from last week, which is why I'm not going to try to buy it. Does that make sense? I really don't want to buy the S&P and the Nasdaq right now because they're trying to go back into that range. Okay, gold's already there. So for me, at least in my opinion, if I can get a buy off that low, I don't feel bad about taking that buy at all, right? Or selling off the high. I do, however, though, need to use a different pattern. And we'll talk about the patterns that we want to use here on this. One thing's for sure, though, there's a grind break here. Now, grind breaks are really cool. Anytime I see a channel going lower, just to kind of give you guys some background on this, I'm not going to go into too much detail on this, but typically when I see a channel, usually, marked like halfway back, right? And usually it's not always halfway back, but typically you'll see a pretty big pullback and a second leg, right? And I always try to get in on that, right? On that follow through. And you'll learn all my tricks of doing that as a client of mine. But what happens sometimes is you get this. You get a channel And the reason why I call these grinders or grind breaks, you get a channel and it gives you this little shallow pullback, right? And it kind of runs lower from there. See the difference, right? There isn't some deep pullback and run, right? Sellers like to sell high, right? And so a deep pullback is a great selling opportunity in a bear market. These are going to go up and just chop, okay? Now, what didn't happen there? The sellers were never given the ability to sell high, right? What happened? What happened up here? They never got their chance to sell high. So now the sellers, they're left hanging and they're going, hey, what, you forgot about us. A lot of times these moves happen because of a strong move up before. This is just a liquidation, right? You know, buyers are taking their profit and the market just collapses. Well, the problem though is, just like a short covering rally, the sellers aren't going to sell down here. They're still waiting up here, right? They're still waiting up around these highs. And again, I call these grind breaks, right? Because they kind of grind their way down the top of that channel. The bottom line is there are still sellers waiting up there, and you'll be amazed how many times that market will pull back and give you that little trap high right for that next leg lower. So now, and remember, what's the key to this? The key is mindset, right? The key is psychology. You know, people talk a lot about trader psychology, but market psychology, the wisdom of crowds, right? Group mentality or crowd mentality or mob mentality or whatever you want to call it. It's all about mass psychology. And when the market slides down like that and doesn't give the crowd a chance to participate, well, there's nothing left to push it lower. The market has to pull back, and when it does, all those sellers come in and they slam it back lower again. It's all about the mindset of the market. So now, thinking in terms of the market's mindset, right? Thinking in terms of the market's mindset, we get this huge tumble lower. I can almost guarantee you, right, the sellers are up here like, what the heck, man? Where are you? Come back to get us sometime, right? We miss you. I'll bet there are a lot of sellers waiting up there, and they're waiting for it to smack it right back down again. Now, where do I think that will be? Well, I've got a channel coming down, and see what happens? It rolls, it breaks, and keeps going. So I mark up that level, and that's where I'm looking, right? That's where I would anticipate, right, to get that short. Now with that, I've got the prior reversal line, that prior swing low can now be used as a level of resistance. I've also got that range, right, that I use to create these range expansions, which you'll learn all about, right, in our video classes here at School of Trade. And so now you kind of have an idea of, again, the mindset of the market. It is a range. And so I want to be a seller, right? I want to be a seller, but at the same time, though, I can definitely justify being a buyer because I think we're kind of right back into that warm fetal position, right? With those bears we're trying to get to. Unlike on, for example, real quick here, if you go back to like the Nasdaq, right? The Nasdaq, I still think if the Nasdaq goes lower, right, I think they're going to try to get back into that range. Right? If the Nasdaq was down to that range right now, I would also have no problem being a buyer down there too, because it's already where it wants to go, right? We're not there yet in the Nasdaq yet, right? We are pretty much there on the gold until we see some more information tomorrow that may change our opinion of where kind of quote unquote there is. But for right now though, we look pretty comfortable. So here are a couple scenarios. One is I want to see us go up. I want to see those buyers now try to come in, buy that pullback. I'm looking to sell into those stops. And if I can get it, right, if I can get it outside that range, that pullback, right, might not get it though. You know what I mean? Might not get it. By the time we get this to go in, pulls back, we may not get that pullback. You just don't want to trade that pullback inside the range. That's going to be the hard part. It's a failure into a pullback pattern. Okay, now, how do I buy off the low? How do I buy off the low? We go down. We're not bullish, are we? We're bearish. So how many tries do I want to give these bears? Well, look back here, right? Look back here. Strong move down. They try once. They try twice. Then they go up. Same thing, right? Let them go lower. The bears will try once. The bears will try twice. And then I can buy. The thing is, you don't want to try buying after that first failure because just like we saw back here, bears are oftentimes waiting for that second try. Okay, the number 2 is very powerful. 2 and 3 in different reasons, right? In day trading, we'll learn more of that in our video classes. So that's the buy I want, right? That is the buy coming in after the bears try once, the bears try twice, then we're trying to buy back up. Speaking of buying, what would it take to become a bull market? The bulls are trying to go back up and reach that 44.9 we left off on Friday. How do we turn bullish? 1, 2, 3. Remember, hold the pullback to the moving average and go. Mark up that high, mark up that low. Okay, don't bother with that low. That low will waste your time. That low right there, there's your sweet spot, and we're buying up from there. Or maybe it blasts, right? Maybe it blasts higher, short covering rally. If it blasts 1 try, 2 try, remember it's a higher high. It's a lower low. Okay, what's really happening is the bears are trying once, the bears are trying twice, and you're getting a trap on this because that's where you want to be as you go higher, to buy as low as you can. Targets, of course, back up, right, to refresh or to refill that gap fill. Great chart there on gold. Now, really quickly, over on the S&P here, I realize we're running late on time here, right? Sorry, over on the euro right now. Now, I told you earlier, let's think about the euro and compare it to the Nasdaq or the S&P. What do we know about the euro right now? We know the euro went up, big strong move in one direction. What usually happens? They'll get a second leg. They get their second leg. The buyers have control of this market now, right? They've got the ball. They have possession. What does it take now for the bears to get possession? They have to rip it out of the hands of these bulls. How do they do that? They have to hold a pullback to the moving average. Strong move down. Do they? No, they don't. Now you can see why. Doesn't this look almost identical? What's the difference here? What's different? What stands out on this? Look at this pullback, and now look at this pullback. They look very similar, don't they? Right? Don't they? They look very, very similar. Look at these two pullbacks here. At first glance, you would think they are very, very similar. In fact, look like that, right? Almost identical. You got double bottoms here, double bottoms there, right? Yeah, okay, the moving average, you can see, look, the moving average is pointed down, right? This one's flat. Okay, that's an easy giveaway. But the big point I'm trying to make here right now, though, is look, it's a 1, 2, 3 off the moving average. We don't have that on the euro. All it is a pullback. So what's the difference between a pullback and a reversal? Holding the moving average, right? Holding that moving average. Right now, the euro is bullish and pulling back off the high. Now, don't get me wrong. That pullback is no weakling, right? That is one hell of a pullback there. You can see, right? It's definitely a very strong move down. And what usually happens when we see a strong shock against that trend? What usually happens? They usually try once. They usually try twice before giving up on it and getting that run back higher. And that's exactly what I'm looking for right now, right, to be a buyer. I know I'm bullish. I want to find levels of support. Look at that. So this is an example of a kind of like a tilted reversal line here, if I can get it to draw on the screen here right now, right? This is pretty interesting. Come on, Joe. There we go, right? That trend line coming over. Okay, pretty interesting how that works, right? Reversal lines, any level of resistance can now be used as a level of support. Pretty cool, huh? Okay, so that's one level of support. I'm also drawing up the highs off this channel. That comes down, right? That's a level of support. You can see I'm knocking once, knocking twice. Now, all I need now at this point is I don't want to buy high. I always want to try to buy at support. So where's the support level? I have a strong move down. The bears have tried once. The bears have tried twice, or they will try twice, hopefully. Now I've got my level of support. Now I know where stops are. All I need is a nice signal candle. You'll learn more about that in the free classes that I mentioned earlier. And we're buying now as we go back up to retest the high. Now, what if we don't get that pullback? What if it just jumps? right? What if it jumps? Don't take the bait. Remember, you don't want to buy high up here. Look for traps, right? Trap low to be a buyer, right? Or maybe it jumps up as it go, right? Trap low to be a buyer. Okay, you don't want to buy high, you want to buy low, and you got to know where you're trying to go, right? As we always talk about in this newsletter, you've got to know where's the objective, where are they trying to go. In a trending environment, they're trying to reach that symmetry up around that 13,600 and change. Now, I also want to bring your attention back a little bit too, because if this thing really tanks, right? If it tanks, it'll put us right back into that range. Remember this range from last week? Okay, that is going to still be in play here if we dump. Okay, I don't think that range is too far off here. So if this thing dumps back in, I do want to be a buyer going back up, especially with that big round number. But at the same time, though, that momentum will be too strong. So what's the best way to buy in a bear market at this point? 2 tries, right? Let them try once, let them try twice. Bingo. Same idea, right? Same idea as buying below the low on gold, right? Same pattern we talked about earlier, buying the low on gold. It's the same idea, right, to buy off of that low of that range. The only problem is we still have that momentum to respect at that point. So it will be a bear market, but it will be into a range now. So as long as those bears try once, they try twice, we're buying that sucker right back up, right into that potential, right? That potential trading range, which would be right there. All right. Great example, right? Is this a pullback or a reversal? It's a nasty pullback that is trying its darndest right now to reverse. Will it? If it doesn't, your job is to buy right into those stop losses, right? Over on the S&P, that's a reversal. And with that reversal, we now look for sells up or continuation down into a new channel so we can sell later on in the process. What a great lesson tonight, right? Is it a pullback? Is it a reversal? You know, when it, guys, again, I realize I'm kind of hitting you with a fire hose of information here for an hour at a time here, right, on this newsletter. I know this can be complicating at first, which is why we do this together every morning in our trade room. You know, we all know there's money to be made out there. We all know there's great opportunities. The problem is the markets move quickly sometimes. Sometimes they throw us curveballs. And it really helps me with somebody like me to do it with you, do it the right way the first time, right? Because by watching every YouTube video and reading every book, you know, trading is a lot like swimming. You can't read a book about it. You got to jump in the water. And just like swimming, you better have somebody there with you to watch your back while you learn the doggy paddle, right, in the pool. I'll be there with you guys, right, paddling right there with you guys tomorrow morning, 8 o'clock Eastern time. To get started, it's really easy. Just register as an advanced member right below the video tonight. Put links in the description. It's on the website here, the advanced course. We have one-time enrollments with great bonuses. We have flexible payment options for membership. And remember, you don't have to get started now. You can always join that free trial. The free trial has a great invite to our trade room on a free pass. It gives a free trading course to learn the basics of the strategy. Hundreds of examples of real setups. Guys, everybody loves that free trial. Grab the free trial. All the links are below the video tonight here on the YouTube channel, and I'll also put that big button up there right in the upper right-hand corner to join that free class as well. In the meantime, have a great rest of your evening here tonight. Enjoy the rest of your evening. Tomorrow morning, 8 o'clock Eastern time at the opening bell. If I don't see you guys tomorrow, we'll do it again same time, same place tomorrow evening on the next edition of our nightly newsletter. Guys, my name is Joseph. It means the world to me that you spend this much time with me every evening, Monday through Thursday. Now get some rest. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.